Now, there's an interesting new impact report from earned wage access provider Paymenow that suggests many South African workers are finding real relief from financial stress between paydays. Now, that's almost counterintuitive. According to the independently compiled study, 94% of users are reporting an improved quality of life. I want to get under the skin of the story, and joining me to discuss what's behind the numbers and what they really tell us about the pressures facing workers is Deon Nobrega, Chief Executive Officer of Paymenow. Deon, a very warm welcome to you. That headline number, 94%, is strong. What should listeners know then, firstly, about how studies like this are tested and verified?
Yeah, Jeremy, a big statement like 94% report improvement in their quality of life is obviously a big number. And this is something that we've been tracking since Paymenow actually started about 5 years ago in South Africa. And it is independently verified by global research company 60 Decibels. We interview typically a couple of hundred of our customer base every single year, and we track what impact a solution like earned wage access and specifically Paymenow has on their lives. And the question of does Paymenow improve your quality of life is open-ended, but the answers come back and is coded and certain trends emerge in the data. And 94% of people have actually quoted that it improves their quality of life, 2/3 of them stating significant improvements. And some of those trends that come out is reduction in stress, financial independence, access to emergency funds when they need it. So it really is solving a purpose and a gap in the market that I'd love to tell you more about.
Well, let's get there in just a moment, but let me come back at you and say that there is a difference, surely, which you've got to separate between real impact from perception, particularly, Deon, when money stress, as we all know, is something that is very emotional.
Yeah, so Jeremy, your typical South African is paid monthly, and unfortunately, they paid quite a modest income. And if you look at how times have changed, we look at let's take your average South African that probably works 20 to 22 days a month. Now that means having to commute to work and back, and most South Africans do make use of public transport or some kind of a taxi service. So that's 42 to 44 cash in hand transactions every single month. And imagine being paid monthly, but having that level of cash frequency that you have to manage happening on an ongoing basis. People have to top up their airtime and electricity every few days. Emergencies happen all the time. Now, when people don't have access to quality financial services and they've got all these cash outflows going on all the time, managing that becomes a big challenge for them. And unfortunately, historically, when you look at the financial services sector, the cost to serve the lower income base has always been very difficult. It's very expensive. Because you can't actually monetize traditionally. And in comes a fintech service like earned wage access, where we are able to serve people at a fraction of the cost, which translates to a service at the fraction of a cost. And that is where earned wage access comes in. So we effectively give people access to a portion of their salary as they earn it. It is 10 times cheaper than any form of credit in the market. And people are using it responsibly. And that is the beauty of an impact assessment like what we've performed is we can validate that a service like this has a sustained improvement in people's quality of life.
Let me come back at you because it's an interesting conversation. Improvements, though, Deon, could also come from salary increases, household changes, maybe debt restructuring, better benefits, broader economic macro factors, rather than just the product or the service itself.
Yes, and I fully agree with that. And that is where a solution like earned wage access has evolved over the last couple of years. So initially we started out with offering people access to cash that they've already earned, and it started off with just that. But then what we've built in was really educating people on better financial management. So built into a solution like earned wage access, we believe you have to improve people's understanding of financial management and financial services. So that's baked into our service offering. But then it's also looking at how can we utilize and leverage the base of customers that we support to bring services and goods at an even cheaper service. So what we do is we go to service providers and we buy bulk, and we're actually able to offer services to customers, being employees, cheaper than they can get it anywhere else in the market. So it's not just giving people access to money. It's not just giving people education. it's also giving them services cheaper than they can find anywhere else that's fit for purpose. And one nice thing about a solution like earned wage access, because we're a B2B2C offering, Paymenow goes in the market, finds the best services possible, but we still have to convince the employers that this is a good service. And they are always able to say, you know what, guys, you brought us a new insurance product, Paymenow. We like it. We're going to test it in the market. It's cheaper than anywhere else that anyone can find it. We'd love to offer this to our staff. And that is really the beauty of this model. It's B2B2C with the employer always being in control.
Deon, let me ask you two questions about behavior and dependency then. Surely regular access can create a rolling shortfall at payday, and that entrenches surely a pay cycle gap, or at least has the potential to do so.
Yeah, Jeremy, that's a good question. And, when we present our offering to clients, that's always the first hesitation that comes to mind. And the interesting thing about our solution is, and I mentioned it earlier, the employers are able to control what the access level is that employees can access. And typically that's 25% of an employee's net pay. But what we found in our service is that the average employee only uses half of what is made available. And I think the mindset change here is different. When people borrow out in the market, people almost treat a loan as extra money. And they might not repay this month, and they might avoid and change their phone numbers in their bank accounts. Whereas earned wage access is access to your hard-earned money, and what you use will come off your salary at the end of the month. So the way in which people interact with the service is really, really different. And the beauty for us has been only typically half gets used of what is made available. And the other interesting thing, on those goods and services I mentioned, that comes at absolute zero fees to the employee. So if you go in the market, the average person tops up their airtime every 3 days, you will always pay a fee for that in the market, and you need money to buy airtime. With earned wage access, we'll give you the airtime at no fees, and what you use comes off at the end of the month.
And that's where we are going to leave it. Deon Nobrega, Chief Executive Officer, Paymenow. I do appreciate your time today. Thank you.